Hello guys, and welcome to another developer video. Today taking an in-depth look at Exxon Mobil Corporation, an American multinational oil and gas corporation headquartered in Spring, Texas. As of the 31st of January 2025, their stock price is $109 with a market cap of 477 billion. Their trailing 12 months price to earnings is 13.6, and their median 10-year price to earnings is 12.4, so they're trading at about 8% above their historical average. The price to cash flow is 8.5, and therefore dividend yield is 3.64%. Their revenue has grown by a respectable 31% over the past 5 years. Their net income has increased by 151.2%. Their earnings per share has increased by 164.6%, and notably, their common shares outstanding have decreased by 1.7%. Their balance sheet also looks pretty good. They have an interest coverage ratio of 43.7, so they can easily cover their interest payments. Their quick ratio is 1.01, which should suggest good short-term liquidity. Their long-term debt equity ratio is 0.13, and their debt equity ratio is 0.15, both showing a very low debt load. Cash flow operations has increased by 86.3%. Cash flow investing, on the other hand, has decreased by 16.5%. Cash from financing has increased by 418.2%, and CapEx has decreased by 10%. Their free cash flow, which is the most important of all metrics in my opinion, has increased by 500% in the past 5 years. As for their financial ratios, oops, I made an error here. I meant to write return on equity as 17.8%. So yeah, as you've seen, I mistyped. So as I've said, the return on equity is 18%. The return on investment is also 18%. The return on assets is 10%, and the return on invested capital is 9%. I found their intrinsic value using a DCF valuation, a multiples valuation, and the analyst expectations. From all of these three, I calculated an average, and then adding a 15% margin of safety, I've arrived at a buy price of $98.84, suggesting that the stock at the current levels is trading below intrinsic value, but not close enough to the acceptable buy price. Now to conclude, they are a great company. They have a great balance sheet. Warren Buffett doesn't invest in them for no reason. There is a reason, and that is that this company is very well managed. Now, I'm not really um, sure if this will happen, but the thing is that because Trump wants to increase drilling, although you may or may not like his policies, that may not be actually that great for Exxon. Sure, their revenue will go up, but with oil prices going down and gas prices also going down from increased production, then I think that's actually the Trump presidency might not that be that great for Exxon. Of course, this is just a variable. I'm not sure if Trump actually will have that much of an impact on Exxon's bottom line, but as we well know, the pandemic kind of ruined a lot of these companies. We saw their free cash flow in the pandemic was horrible, and now it's increased to very good levels. If production stays the same, if prices stay approximately speaking the same, so they don't drop too much and they don't increase too much, because if they increase too much, then demand will drop, and this will cause a bigger push towards towards renewables, and this is not good for their future. But for now, they're a great company. They're trading at an okay price. I'm not really sure if there is much to add here. Of course, you could tell me, yeah, I know comments every little thing in their financial report, but to be honest, due diligence is only something you do after you assess the company from a macro point of view. So this company is, in my opinion, a great company. If their price drops just a little bit, I think that'd be a great buy. And yeah, I'm not really sure what to say about this company other than that it's a great company, but just not at the right price. Warren Buffett got it at the right price. I wish I would have. But of course, I made money from other investments, and that is why you should diversify. You shouldn't put all of your eggs in one basket. Um, yeah, I don't know. This is a This is a great company. Advise you. Actually, I don't advise you because I am not allowed to do that. I'm not a financial advisor, but I believe that they will be a great buy at $90. If you get this at $90, then you've got a great opportunity in your hands. Of course, if they drop to $90 because of something external, like Trump absolutely destroying oil prices because of increased production, then no, they're not a buy. But assuming current conditions, and of course you should do your own due diligence, but assuming current conditions, I think the $90 would be a great price tag for this beautiful company, for this great business. Now, let's move on to our affiliate, Ticker Data. Ticker Data is a great tool. Ticker Data offers real-time financial data for Excel and also a lot of financial templates. So, if you want to, for example, do a DCF, you want to do a bank valuation, you want to do a dividend discount model, then you go to Ticker Data, you download the template, you put it in Excel, use their API for real-time financial data, and in just a few minutes you can get whatever information you want. So I suggest you check it out. It's also pretty cheap. I put the link in the description and I think you'll love it. Also check out my investing blog featuring in-depth analysis from the link in the description below, where you can find great analysis that I can't put on YouTube because they're a bit too long. So you should go check it out. Now, thank you for watching. I hope to see you in the next video.